Hi everybody, Alex Deploy here, and this is video 2 in our review of 2 high profit and successful trading robots. Now before you watch this video, please make sure that you have watched video 1, and video 1 is available in this section of the forum. So in this section we're going to be looking more critically at the downsides of the bear and stag robots that are provided by Veritex. So the first thing that I would note from this offering is that those EAs are extremely pricey and there is a no refund policy. And I'll take you to the website quickly and we can have a look at that. Okay, and here I am on the Veritex website, and here are the EAs that are offered by them. You can see the price is £380. That is most probably between 450 to 500 US dollars. So I think that might be a bit pricey given the fact that these are very similar type of trading strategies. Also, as you can see, there's no bundling of the strategies. So there we are. We've got those ones that what's as I mentioned in video 1, what makes them really attractive is they are set and forget EAs with no real settings that you need to worry about. So that covers the pricey and no refund policy, which is in place. There's no bundles that I mentioned, and then there's a need to use 1 cent accounts because the recommended position sizing is 0.01 for every 50,000 in your account in some of the EAs and 25,000k in your account for the other EAs. Now that's a huge amount of capital, and that in fact is what makes these EAs so successful, is that they are properly capitalized for the strategy that is being used, and that makes them a lot safer, but you need a lot of money to trade them. But if you use a 1 cent account, a $50,000 account can become a $500 account. So a $500 1 cent account will be traded as if it is a $50,000 account, and that's why you can still trade it with 1 cent accounts. But that is not always critically clear when you are purchasing the EA. The EAs also need high leverage because they are using martingale type of strategies. It's not true martingale, but those kind of strategies. The higher the leverage, the less money you need in your account to finance margin. So we need leverages here, and I think on the website they quote 500 to 1. So you need a special 1 cent account, and you also need very high leverage. Now the risks are potentially highly underestimated, and I'll give you a view of what I mean by that. But let's go to the next point. The strategies can be replicated using the profit recovery robot. Because we've tested these 2 strategies, 2 of the strategies that are provided by 2 of the robots, we can basically reconstruct what's going on there, and by doing that it is actually very easy to replicate those strategies in the profit recovery robot. The profit recovery robot basically is a robot that covers all possible ways that martingale can be traded, and therefore it will cover the strategies used in these EAs. Okay, let's have a look at the risks that are potentially highly understated or underestimated. To do this, I'm going to have a look at our FX Blue statement that shows the results of us testing the stag version of the EA. So here we are, and as you can see, the peak drawdown is actually shown as insignificant, small, because there are no drawdowns in this equity chart. But one has to have a look at the closed deals to really get a feel of to what extent martingale is being stretched to. Now before I look at this, I must just stress that the providers of these EAs say don't use any other currency other than the Euro USD. So these EAs are very specific to the currency being traded. And when I have tested it, I actually used a wide range of currencies, which were all nicely positive and provided nice, consistent win rates. So let's go and have a look at the true risk. So I'm going to go to orders, and I'm going to have a look at closed orders. And then I'm going to filter this, because I know this actually happened on the Euro AUD. So I'm filtering it. So now I'm only seeing the Euro AUD. And now I'm going to have a look at the lots traded. And I'm going to go for the smallest lots, and then I'm going to sort them to the biggest lots. Now, here's where the problem comes. At some point during the trading, there were 300 main lots open in this trading. Now, the only reason why there were 300 lots open is because all of the trades before then were negative. So the true drawdown is actually amazingly high for this particular system, although if you look at the statistics, it says there are no drawdowns. So during the day, during that one day, the drawdown went so high that 300 lots had to be traded in one trade, and then luckily at that point it went positive and made up the losses there. Luckily this didn't cause a margin call. It was very close to causing a margin call. It didn't, and all those negative deals were actually cashed in as a net positive. So that is what I just want to show you. That's how you see the progression that is used in this trading strategy. I must point out the Euro Oz was not intended to be traded. The Euro Oz was not an intended currency. So I must also clarify that the intended currency is the Euro USD. If we look at the Euro USD, and I'll clear the filter, you'll see that the profitability for the Euro USD is actually quite conservative, and that is why they basically say you need $50,000 for every 0.01 in your account. You'll get a nice conservative return, but don't go and fool around with high volatility currencies. So I'll just point that out now. The links to these accounts are available in the forum, so please use these links. Go and do the same thing as what I've did. Recreate the strategy using the profit retriever. You can actually duplicate the strategy, and that is what is quite nice about them. Also the bear strategy can also be duplicated using this approach that I've just shown you. That makes the review of the bear and the stag robots a little bit more complete, so that you're aware of the downsides, the fact that you need 1 cent accounts, you need high leverage, you are exposed to larger drawdowns if things go really bad, and so on. But all of those can be overcome by increasing gap sizes and slowing down the progression rate of top-ups and all kinds of things that is allowed through the profit recovery robot. Now, I hope you found this video interesting. If you have any questions, please just log them in the forum, and we can discuss them further. From me, Alex Eploy, cheerio.